I want to bring in Oliver Sloup of Blue Line Futures to chat about the market action here so far to start out the week. All right, Oliver, things look kind of dire in the beginning, but they're starting to look a little better. What do you think?
Yeah, a lot of weakness in the overnight early morning trade that kind of had everyone on edge coming into this morning's trade, but we got the floor open at 8:30 Central Time, and we rejected that overnight price action, which I think is pretty encouraging for the bull camp. That December corn contract was hovering right around 650, which is psychologically significant, but also technically significant with the 50-day or the 100-day moving average coming in just above 650, 650 and three quarters. So we were able to defend that, and now seeing some buyers come back into the market. And there is a bullish seasonal that starts this week as well that I think a lot of traders are potentially keeping an eye on and potentially front-running. Over the last 15 years, the March corn contract has rallied from November 16th to January 4th. So again, seasonally, historically, we tend to see the market try to firm up a little bit here into the end of the year.
Well, what do you see when you look at the chart on the soybeans and the tendencies that could bring in some pressure from South America right now?
Yeah, so soybeans were obviously extremely choppy at the end of last week. We're kind of holding our own here near 1450 for that January contract. I'm pretty upbeat. I know that there are some headwinds in these grain markets, but I think looking at the seasonality and the charts that we're potentially on the verge of a move back north. Now, for the January soybeans, if we can get out above 1458, 1465, there's not a whole lot of resistance until you get towards that psychologically significant $15 handle. So we need to get out above last week's highs. That could potentially spur some additional buying from the funds. The commitment to traders report was not out last week. It'll be released here this afternoon, so that'll be something to keep a close eye on. And as mentioned with corn, there's a bullish seasonal that starts this week, and coincidentally, there's one that starts the exact same day for March soybeans as well. That's November 16th to January 9th, and we've trended higher during that time period for 14 out of the last 15 years. So seasonally, again, we start to firm up here into the end of the year.
On December Kansas City wheat, I see where that 100-day moving average came in there, and it seems like it provided solid support last week.
Yeah, it absolutely did. The wheat markets have been very volatile, very choppy. I think if the U.S. dollar continues to soften up, that could potentially put a little bit more momentum behind some of these grain markets. And typically when you look at currencies and grain markets, wheat is going to be the one with probably a little bit higher correlation to a weaker dollar. So if we continue to see that become a trend, I would expect wheat to be a beneficiary of that.
It's especially impressive when the dollar is actually 641 points higher today. It's at 106.805, and the wheat is higher nonetheless. So pretty encouraging there.